Yeah.
I'm gonna need to lean on you, Thor, if that's okay.
That's okay, Johnny.
Okay, great.
And then,
Yeah, so let's get into another lesson of training, guys. So we wanna do some housekeeping to make sure we stay on point before we jump in. And I think when Johnny shares his screen, so I think he has a disclaimer already.
okay,
Uh,
I have it as well.
okay, you got it.
Cora, would you share yours first with the disclaimer?
Hold on, I gotta go back.
If you're not able to share, you know, just read it.
Okay, are you seeing it? Okay.
Yes.
Yep.
Trading and investing carries a high level of risk. You could lose all or some of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
All right. Thank you, Thor. Thank you. And we're gonna stay with Thor and see if we can cover any quizzes we had. I think it may have been 3 of them, Thor.
Okay. So the first one was on the 11th of August. And it is, what formula do we use to determine the 50% retracement on a chart? Is it A, take the lowest price and divide by 2, B, subtract the highest and lowest price, then multiply the total by 2, C, add the highest and lowest price, then divide the total by 2, D, not sure, E, none of the above, or F, all of the above.
C.
And I read, Papi?
C.
Okay. Anybody else have a different answer?
What is C?
C is add the highest and lowest price, then divide the total by 2.
Okay. Okay. So that's the answer everybody's giving, Thor?
Yes, that's the answer everybody gave.
Yeah, I'm saying C.
Yes, and that is correct.
All right, great job. Great job.
Yeah.
What's the next quiz you
And
got,
then on the 14th or the 13th, we have another quiz, or 14th.
Mhm.
In order to enter into a trade going short the market, you have to place an order to buy a futures contract. And I'll repeat again. In order to enter a trade going short the market, you have to place an order to buy a futures contract. Is that true, A, or B, false, or C, not sure?
That's true. A.
Okay,
Also
anyone
A.
else?
A also.
Okay. Anyone different? No? Okay. Devin, you want to take this?
And yeah, well,
Okay.
you give them the correct answer, and then let me speak for a minute.
Okay, the answer is B. It's false.
Correct.
That's what I.
All right, so you have to break this down for me.
Johnny, you want to break it? You want to do this, or you want me to? We have a challenge with this, and that's why we try to spend time on it. But
Go ahead, please.
so read the question. Everybody listen up. Listen up. Read the quiz again.
Okay. In order to enter into a trade going short the market, you have to place an order to buy a futures contract. So in order to enter the trade going short the market, you have to place an order to buy a futures contract. Is it A, true, B, false, or C, not sure? And the answer is B.
Now we had a couple people say that it was true, and we had some people say that it's false. And I want to help y'all understand where we could be getting confused at. So this quiz is asking you about trading the market down, meaning going short the market. If you wanted to trade the market down, you would go short the market. That's what the quiz is saying. And how would we trade the market down? How about we put an order in order to get into the market trading it down? That first order that's going to get filled needs to be what type of order? Rashid, you mind if I pick on you for a minute, bro?
No, I don't mind.
Okay, great. Thanks, man. So if we want to trade it down, we got to put an order in so we can get into the trade. And if we want to trade it down, the first order needs to be doing what? It needs to be buying a contract or selling a contract.
From my understanding last week, I thought it was that we sell a contract and then to get out, we buy it back. And then when the market is going up, we buy a contract and then we sell it to get out. I mean, the opposite?
No, you absolutely, oh, you're very correct. That is correct. Now, in this quiz question, did you heard the quiz question that she just read, right?
Right. She said to get in to the market or to short the market,
That we have to buy a contract.
do we have to buy a contract? Oh, okay, yeah. So that would be false. We sell a contract to get into the market to short it.
I see
Yeah.
where, I see it. I got it. Thank you.
Everybody understanding this? It's that same concept we talked about with the car, remember? With the Yukon.
Mm-hmm.
Yeah, so remember, Johnny gonna sell me a Yukon, but he don't have the Yukon yet. But he went ahead and, met with me, and we agreed to sell me a contract or sell me a Yukon at a certain price. Everybody remember that scenario?
Mm-hmm.
Yes,
That's what this quiz is referring to. And
Yeah,
we're gonna
sure.
short the market. We're gonna sell a contract and trade the market down. So if we buy a contract instead of selling one, we will be still trading the market in what direction?
Oh,
You buy
If
it
we're
going up.
buying one, yeah.
Yeah, buying is going up.
That's right. So that's why the answer is false in this quiz, because we don't buy first in order to go down. We want to trade down. We sell 1st.
Mm-hmm.
Everybody clear on this?
Yep.
yes, absolutely.
Yes.
Great.
There were
Thank
only 2 quizzes, and we're done.
I think we had one more because I posted a chart. I was gonna ask you if you could share your screen when you go over that third one about the chart.
50%.
Well, I don't have a third one. What is another one?
You don't see the third one where I posted a corn chart?
No. I'm looking through it now, and there are only 2 of them.
It's a chart asking did this chart make a 50% retracement?
Uh-huh.
You don't see it?
I remember seeing it though in the quiz. Yes, I do.
Okay.
You see it, Laura?
Yes. Okay.
Can you share the screen and show that chart while you give us that quiz? Are you able to do that?
But let me see.
Yeah, if you can go to the group and grab that chart.
Okay.
Go the other way.
I think it's coming up.
What's the date? Yeah, what's it? This was on the 13th.
Yeah, you
What's
want to keep. I think it was the other way.
Yeah.
Yeah.
Okay.
So you should see a chart, a coin chart,
A
and
corn
it
chart.
should.
Okay.
Yeah, I don't.
See? This
Keep
is the one we
going.
just did. Okay, let me keep going.
August the
There we
third.
go.
There
There
it
we
is.
go. Right there. Thank you. Okay, can you read that quiz for us, Thor?
Okay. Did corn make a 50% retracement on this chance? On this chart? Did corn make a 50% retracement on this chart?
Mm-hmm.
Yes.
Tomorrow you said yes.
Mm-hmm.
Okay. Anybody else want to answer? Tomorrow, y'all, I want to make sure everybody understand this. Now we
Well,
won't.
to me, it looked like it's on its way to a 50-cent retracement, but it doesn't look like it's all the way there yet.
Yeah, I'm looking at it right now myself.
Okay, so
Yes, I did a miscalculation. Let me see.
so Rashid said that he don't think it's quite there yet, but could be on the way. Okay, so we have a formula that we use, right?
Mm-hmm.
So let's look at this real quick so we can jump into our training for the night. Thor, can you kind of help us out? What's that lowest price?
Okay. Oh
You
my,
can just if you could just we just go off the best price you can see because this
yeah,
an old chart.
Look
I'm
like
blocking this.
490.
Yeah, it's blocking. Somebody have to help me.
About
490?
490.
Yeah.
Okay. So if y'all got your calculators out, 490 would be our lowest price. And what's the
Like,
highest price? Look like
look
80,
like 630.
Mm-hmm.
630.
630.
Mm-hmm.
And then what we want to do next? We want to take those two numbers and do what, y'all?
Adam
Add them together. And then
and
what's
divided
the
by
number?
Then divide it by
Add them
2.
together and divide it by 2.
Right. So I think Adrian put something in the chat. What number did y'all come up with?
560.
560.
Yeah.
Okay. Y'all see over to the right, those numbers on the right, you see one of them that's in bold.
Yeah, it says 580, 558.
580.
558.
All right. So if you look right below the 580, did it look like the candle? Sorry, y'all. Somebody keep calling me. Does it look like the candle went down a little bit lower than 580?
Yeah, it's
Or
on
the bar?
558-4.
Say it again.
558-4.
So it didn't quite.
You said
It's,
558?
that's what I'm looking at. The big bold letter. I mean, big bold numbers.
That's correct.
So do we have a 50% retracement, Thor?
Yes, we do.
It's almost spot on,
Yes.
Yeah, see,
right at the 50% retracement. Does everybody see that?
Yeah, so let me ask you something though, Delvin.
Yeah.
When it's two, I guess that would be points off like that. You could still consider it to be the 50% retracement outside of what you calculated. So it's still like on the border. So it will still be considered a retracement.
Okay, if you look at the chart, you're seeing where it's 558.4. But look below that, it went even lower than 558. See that? And then
Mhm.
it came back up to 558.
Yeah, that's right. You see that bar that went all the way where she had the cursor?
Mm-hmm.
Mm-hmm. Yeah, yes.
yeah, I see.
And then it
This
started to back up. Yes.
this was this was a 50% retracement almost to the exact number.
Mm-hmm.
I mean, you can't get any closer than this, but it did retrace 50%. So everybody clear on this so we can jump into tonight's lesson. But if you're not, please say something.
No,
I'm
this is
not.
good.
I'm not.
This is good.
That's why I asked the question. By it being calculated 560 and it's 558.4, it's 2 points shy. So it's still considered in the retracement area. That's what's being said. If I'm have I said that right?
So at 560 was the 50% retracement level, and you said it went down to 558. It looked like it at 560, when it came down to 560, that was 50% retracement right there.
Right.
But like she pointed out, Thor pointed out, it actually went 2 cents lower to 558. So we had our retracement at 560, and it actually went down even 2 cents below 560. Do you see what I'm talking about?
Yeah.
You see
But
that?
yeah, I do. I see it clearly. But what I'm trying to say is that because if it's not spot on 560, it's 558, it's still considered a retracement. Is anybody understanding what I'm asking? Like, by
Yeah,
us saying,
I think you, I
Yeah,
think you,
I get what you're saying.
I think you again kind of confused on the fact that 560 is what a 50% retracement is.
yes,
I get it.
Okay, it can go to 530. It doesn't matter. All we wanted to see it to retrace back to the retracement level, which was 560.
okay, that's what.
Whether it stops at 560 or keeps going, it made a retracement when it hit 560. Are you with me?
Right, but that D, I'm with you, but I'm not with you. So, like, I understand the retracement is 560. So you're
Mhm.
saying if it's 558, if it's 528, it's still in the retracement area, is what you're telling me.
What I'm telling
So I
you, the
think
question
I
is, did we
think it's
retrace
based.
50%?
Yeah,
let
so I
me,
think what he's saying is that it doesn't have to necessarily be the exact number that we do our
Yes,
calculations
that's
on.
what I'm saying.
Yeah,
That
it gotta be in that range. So if we do
okay.
our calculation and it says 560, but it actually goes to 558, then it went past its retracement by at least, 2 points. So we know that it's already went 50%. Now
Okay.
we just got to figure out if it's going to go back up or if it's going to continue to go back down. And I think that's where the confusion might come in. It doesn't have to be exactly the number that we calculate. It just has to be in that range of that number.
Thank you, Rod.
Closest to it as possible.
That's what I was looking for, Rod.
Yeah,
That's
that's it
exactly
right
what I was
there.
looking for.
Very,
All right,
very good, Rasheed. Very good.
Yeah, that's exactly what I was looking for.
Everybody clear on this now.
Yes.
Great job, Rasheed.
Can I just ask a quick question?
Mhm.
So now I understand how to get the 50% retracement, but can you remind me why we need to know about the 50% retracement in terms of trading? Just remind me about that again, why we need to know that.
I think it's based
Okay.
on the fact that because that way we can see which way that it's trending. Like, because I think our number one rule is to trade the trend. So we know which way, or we can at least try to figure out which way we think the trend is going to decide how we want to get in. and whether we want to short or we gonna ride it up, so we can know which way we want to get in to get the money. So knowing where the 50% is just knowing which way we want to get in, like, and determining which way that is going, like which way the market is going, if I'm mistaken.
Well, that was a real good stab at it, Rashid. I think you did a good stab at it. I'm gonna let Ms. Thor tell you, when we get into a trade, what's the importance of the 50% retracement? What are we using, and what is that used for when we get into trade? Ms. Thor, tell us what we use the 50% retracement for.
That's our target.
That's our target. Our exit strategy, right, Ms. Thor?
Yes, that's correct.
That's why we want to make sure we know what a 50% retracement is, because if we were to say, hey, this looks like this market is making a top, and we want to trade the market down, we want to have a target where we think the market could trade down to, and we use the 50% retracement as our target when we get in. Remember, we always want to have an exit strategy. So that's the most important reason we want to know the 50% retracement. Everybody good on this?
Yeah.
Yes.
Absolutely.
Yeah, that's our target. We have an entry, and then we got to have an exit strategy. So when you get in a trade, the 50% retracement is where you is hoping and looking to see the market trade to. Everybody good?
So basically, what you are saying is that the 50% retracement, once you get into the market, you're saying basically that will be the point where you want to exit the trade, because it tells you basically that the market would most likely would go up to that amount. After that point, it may go higher, it may not. So that is a good point to actually exit the trade. That's basically what you're saying.
It's a strategy to let us know if even if it's a trade we want to take. Let's say the 50% retracement was much higher than this, and it was way up a little higher. When we go to calculate our risk to reward ratio, this trade may not be worth taking because the market could already be at the 50% retracement. You know, but in this chart, and this right here, the chart that we're looking at is not. But there's going to be charts where you'll see once you do the 50% retracement, the market has already retraced 50% already. So why would you get into the trade? It's already at the target right now. You see that? But in this case, it's not. But if you were looking at a chart that was like that, it would help you know, I don't even want to even get into this trade. But we don't have to get out when it gets to our target. The target just helps us to have a price where we want to see the market trying to get to, trade to. If it keeps going past our target, great. We just keep trading. But the target gives us an indication of where we want to see the market go to. Does this help everybody? Everybody good on this?
Yeah.
Yes.
Yes.
All right. Johnny, I don't know how much time we got to get into tonight's training. Thank you, Ms. Thor. So Johnny, you want to kick us off? See, what we going over tonight?
Okay, we had a questionnaire to come out to see if we could figure out where everybody was. And so this was the questionnaire, and I got stumped on the first question. What is your first name and last name? All right.
If you don't know it, Johnny, just make up something. If you don't know your first name, just make up something.
All right. I got 3 first names, so I'll just pick one. All right. So question number 2 is, which rule is considered to be our golden rule? Always use a stop loss. Don't be a thrill seeker. Never risk more than 10% on one trade or one of the other 25. So what we want to do, and I don't have the results, folks, I don't think. So
Mhm.
what did y'all answer to these questions?
C, never risk more than 10%.
Pardon?
Yes. C. Or box.
Never risk
think-
more than 10%.
I think we had some
Okay.
answers in the chat, Johnny.
Pardon?
I think we had some people answering the chat. Is everybody clear on this one?
Okay. So the answer is never risk more than 10% on one trade.
Mhm.
In your own words, what does it mean to treat this like a business? Would somebody like to share what they said? See, Jamal, I told you you're going to do this.
I believe
I'm going to turn this over to you.
Mr. Scott, man, come on, man. Y'all yeasting me up. All right, so look. All right, so for this one, what I put is to take it serious. It was really simple, my answer. It was to take it serious. And that was my opposite of if you treat it like a hobby, then it'll be a hobby to you. But it's something if you have a business, you take your business serious.
Okay.
Right.
Probably kind of vague. It's probably kind of vague, but that's what came to me when I came to that question.
So I have one. You must learn the business before you can start the business. Because if you don't know the business, you come in and take heavy losses before you get started. I mean, once you get started.
Mm-hmm.
Okay. So learn the business.
Mm-hmm.
Learn the business.
Okay.
Mhm.
Anybody else?
Anybody else?
Well, I would say, what I would say in terms of by taking it as a business means that I follow the rules, because in your business you have certain guidelines that you follow to make your profits, for your business to be successful. I don't think people run a business anyway. You must have certain guidelines to follow for your business to be successful. So in trading, you follow the rules. There are certain set rules that are there to guide you into making profits and to do well in your trading, and so that you don't go on emotions. You follow the guidelines or you follow the rules. That is what I would say means taking it as a business.
Outstanding. Follow the rules. Anybody else?
I think all of them were good answers, Johnny. What you think?
Pardon?
I think all of them were some good answers. What you think?
Absolutely.
Yeah.
Absolutely. All right, let's go to the next one. What are the 3 positions that we can take in the market? What 3 positions can we be in the market? Bullish, long the market, bearish, short the market, out of the market, all the above, none of the above, or others.
All of the above.
I agree.
Yes, all of the above.
So do
Outstanding.
I agree.
Because
Okay.
that guy, the guy they call Mr. Corn, said that even if you out of the market, that's a position. Boy, I sound like I almost know what I'm talking about. Good God.
Okay. So let's just see how much you know. Now, question 5.
Mhm.
What is the difference between the producer and the small speculator in the market?
The producer is a person like you, Mr. Scott. The small speculator is also a person like you, Mr. Scott, and me, and everybody else on this call are small speculators. The producer is the one who breeds the cattle and set them up for shipment and all of that. Like you were saying a couple of weeks ago, and I said I didn't know you was a producer. So that would be you. Small speculator would be a person like you and me, Ra, and everybody else who's trading in the market. If I'm
Anybody else?
I agree
Nah,
to
you sound good to
both
me.
of-
I don't know.
Sound real good to me.
yeah.
I've been studying.
Yeah, we are the speculators because we are the small traders. We are the small traders in the market. The producers will be the ones who I would say I wonder if I'm right here that who are well I'm not sure if I'll say that right, but they would be the people with the bigger contracts, I would say, if I'm not mistaken, and we are the ones that will take the majority of the smaller. The market is more filled with the smaller speculators, and that's what causes volatility in the market because many of the small speculators, the bigger ones, do a lot more, but they are less. They are less than us.
Who's the most important?
Small speculators.
All right, here's a good one.
That
Here's
Jamal,
the next one.
that Jamal, he is on it, ain't he?
Like
Man,
y'all,
I'm trying to
like I
tell
know
you like a crackhead on an 8-ball.
Rashid.
All right, now we're going to really test you.
Uh-oh.
Define a futures contract.
Mm.
Who wants to take this one?
That repeat.
Define a futures contract.
Man, I got it in my tongue.
All right, let's go, y'all.
The way I put it in me.
Johnny don't gave us this definition so many times.
I'll take this one, Devin.
Huh?
I'll take this one.
I forgot what I put for that.
All
Well,
right, go ahead, Thor.
Okay. A future contract is an agreement between a buyer and a seller
Mm.
where the buyer agrees to pay a specific price or for a specific quantity of a product that the seller promises to deliver during a definite month in the future.
Boy, they on fire,
I
Johnny.
agree.
Good God Almighty. Mm-hmm.
Hey, somebody learning something around here.
And I'm trying to tell you they are.
Woo. That's what I'm talking about. Woo.
Time is not being wasted, boy. All right.
Outstanding, good answer. So, a futures contract is an agreement between two individuals
Mm-hmm.
where one person agrees to buy a certain commodity at a certain price to be delivered at a certain time, and the seller agrees to sell that commodity at a certain price at a certain date to be delivered at a certain time. All right?
Mm.
Outstanding. Very good, Thor.
Very good.
That was excellent, Mr. Orr.
So, what is a commodity?
A commodity is something that we use every day. That's vague. Coffee, meat, milk, eggs, grains, oats. And it's used on a regular basis. I mean, people drink coffee every day almost. So
Money,
money,
Cattle.
credit,
credit, soap. Even
Well,
though it's not
let me ask it this way: is a commodity? Is it a want or a need?
a need. Oh,
It's a necessity, it's a need.
it's a need.
Definitely
That's right.
need.
It's a need.
Outstanding.
Yeah, these are things that we need every day. You know, we use every day. If you listen to some of the things that Jamal and Johnny just were calling out, just about everybody on the call, if not everybody on the call, has consumed or used those commodities since you woke up this morning. So, and you will every day.
Yep.
So yeah, great job again.
All right. Next question. Why does the futures and commodities market exist?
Mhm.
I put it. The futures and commodities market exists for leveraging purposes.
Okay, and so for those on the call who may be wondering what you mean by that, can you
Okay.
elaborate a little bit?
Okay. Yes. Um, leveraging between the possibilities between losses and gains. So if you have a possibility like Mr. Johnny, he's a producer, so he would leverage his possibilities by being a producer and also trading in the market. So either way you look at it, if he loses on one end, he's going to gain on another end. So it's a leveraging tool. Good God.
Okay. Anybody else?
I want to say it helps affects the price of the commodity.
Okay. Very good. Somebody else?
I'm so impressed, Johnny.
To keep
I'm
yes.
so impressed.
So it keeps the futures and commodity space from being overtaken by fraudulent activity.
Okay. Good. Anybody else? Can
I'm just thinking
I'm
that
gonna
it's simple.
I'm gonna add one other thing to it.
Make
But
us rich.
I want to ask what's the most important part of this? And it's in the question.
The market.
Mr. Johnny, repeat that again.
I said, what's the most most important part of this? And it's in the question.
Us. The market.
Okay. It provides a market where producers and commercial users can buy and trade commodities, which provides liquidity and stability to the market.
Can you say it again, please?
You guys were right on top of it. All right. It is a marketplace where producers and commercial users can buy and trade commodities, which provides liquidity and stability to the marketplace.
Okay, thank you.
So to make sure y'all clear, Johnny's giving you the last piece to the puzzle that y'all didn't say, but we want to make sure y'all understand that Jamal gave a correct answer and Rashid, and the other part Johnny was looking for, he just gave you. So that all that was the reason why the market exists. Man, I'm telling you, Johnny, they on fire, man.
Absolutely. And so since I asked the question, what is liquidity?
Liquidity would be the actual funds available in the market.
And I had yeah, I looked at liquidity as gains, the potential gains being able to be extracted from the market. But yeah,
I looked at it as like the things that you would sell and gain as a profit.
yeah, kind of synonymous.
And let me
I
ask,
would say the actual trading on the market brings liquidity. The more volatility on the market, the more liquidity it brings to the market. So that the more people trade, whether selling or buying, once trading is happening, it brings liquidity to the market. That's what I think.
let me ask you a question, folks. When we talk about the floor and the ceiling,
Mm-hmm.
all right,
Mm-hmm.
and we talk about, right, support and resistance, right? What else do we call that when we talk about those terms? One starts with an S and one starts with a D.
Okay, y'all, what is the floor? The floor is what?
Support.
Okay. Okay. So what is the ceiling?
Resistance.
Ceiling is the resistance.
And the resistance.
The floor is support, the ceiling is resistance.
Yeah.
Okay, so question, when you hit resistance, okay, what does that tell you?
That the market is not gonna go any higher than that. It's being tested.
You guys have heard these two terms a bunch.
Resistance is a place in which the market will, the highest that it will go before it reverses.
What happens, what do they call it when nobody else wants to buy? What is lacking?
Liquidity.
No, it starts with a D.
Demand.
There you go. What's the other side of demand?
Supply.
Supply and
Exactly.
demand. Okay. All right.
Okay.
So liquidity means there is supply and demand.
The tech.
Are you with me now?
Yes.
All right.
Yes.
So the more supply you got,
The more demand.
then the more, well,
No.
do you or don't you? But if you've got adequate supply and adequate demand, you have liquidity. You have a constant flow.
So if you say the ease with which trade can be done without affecting prices,
That's correct, because if there's no supply and a lot of demand, the trade can't go through
no.
because there's nobody willing to sell. Right?
Mm-hmm.
If there's plenty of supply, but nobody wants to buy it, then there's no liquidity. So there's adequate supply and demand in your liquidity. All right. But you guys are still, there's got to be enough contracts out there for there to be liquidity as well, right? So that's supply. That's why we always ask, and there's got to be enough volume. right? Delvin,
I got
Hmm?
back to you. Are we still on target?
Yes. Uh-huh. Did you have any more? Was that the last one?
No.
no.
What does the futures and commodity market offer you?
Well, Johnny, if you don't mind, I wanted to ask one more question on that topic before we moved on.
On liquidity. Okay, yeah, that's really what I wanted you to do.
Okay. Now that we understand it a lot better, based on what y'all just went over, I want to ask. We understand liquidity now,
Hmm.
so when we get into the market, what is it? What is the value that we bring to the market? What when these small speculators y'all talked about,
Bring
who
value,
Liquidity.
brings
liquidity,
who,
value.
who brings that liquidity? We do. That's what you're saying?
Yes, because when we participate in the market, whether we are buying or selling, we bring liquid. I believe we bring liquidity to the market.
There you go. Yeah, that's why it's so valuable to have us. The more of us keep coming into the market, the more liquidity we bring into the market. Think about what Johnny just said, and the
More
liquidity.
demand.
Liquidity is the main thing. Could you imagine getting in that coin trade, that chart we just looked at, and you got in it after you saw the formation form and your order got filled and you start trading it down and it went all the way down to the 50% retracement and your profit is $5,000
Woo!
and you made $5,000 in just 2 weeks. And guess what? Guess what?
Hey, Delvin,
What?
I hate to ask you this, but you're getting into question 10. What does the futures and commodity market offer you?
Woo! I didn't know we had a question that was gonna be uh like that for number 10, Johnny.
You didn't look at the survey, sir?
No,
Hey, Barbara did it.
no,
Did a
Barbara did it,
spectacular job too. She did an awesome job.
but I am at fault, Jamal, because she asked me to look at it and I never got around to it. But,
No, that's all good. It's like
well,
that when you got all that money, bro.
he's so crazy. But Johnny, back to your question though.
Hmm. Hmm.
So y'all gave some great answers when I asked you, about what we bring to the market. But read that. What you say number 10 was, Johnny?
What does the futures and commodities market offer you?
Ooh, come on, y'all.
I would say it offers me the opportunity to be able to make profits on the different commodities being traded without having to put out a large amount of money because of the leveraging in the market. That because of leveraging on the market or in the market.
You you know what? I was gonna suggest that it would be something like a financial gain, but the futures and commodities market can have you to go into a grocery store space with a different eye. You can go in there and look at corn. You can go in there and look at oatmeal and start to kind of you will be a different type of shopper. You know, you'll be a different type of shopper. You'll start to connecting the dots with why you'll go in there and see corn going bad, be like, man, let me go check and see what the weather is for corn. Let me go check and see what the weather is for grain. Let me go check and see what the weather is for cattle. You go into the grocery store spot and you don't see a whole bunch of steaks and all that other stuff, and you connect that with the news and start looking at your charts. So I would say it would have you to really be a different type of shopper, for real, in a grocery store and wherever other commodities are. You would start to have a keen eye for it.
Okay. All right.
I'm sticking to what I
Anybody
said. I
else?
may be wrong, but
Anybody else? Okay, folks, basically it allows us to participate with the big boys in a market. That's the most important part of that is the futures and commodities market offers us the opportunity to participate in those markets where otherwise we wouldn't be able to, which leads us to the next question. Which is the definition of leverage? Control only one contract with a large deposit? Money that brings money that you bring into the market? Controlling a large contract with a minimal amount margin? Or using borrowed funds to trade in the market?
Let's go, y'all. Come on.
the one before the last one, I don't know what number, what if it's D or C or whatever.
Control a large contract with a minimal amount.
Yeah, that's what I'm saying. I see.
I got that one wrong.
What did you answer?
I answered the answer for liquidity, money that you bring into the market. Yeah.
Oh, money that you bring to the market?
Yeah. I see that it is wrong, but that's what.
Okay. That was very good, Inga.
Thank you.
All right. What are two terms used to describe margin and maintenance?
You know, we got that a few weeks ago.
Deposit and balance.
Say that again, Alice.
Deposit and balance.
Very good. Very good. You remember we talked about,
I said that, deposit and balance too.
y'all remember we talked about substituting the word margin and substituting the word maintenance. So margin, we want to substitute that word for deposit.
Yep.
And maintenance, we want to substitute that for a balance.
Mm-hmm.
So when the margin is what we have to have in our account to get into the trade, that's a deposit we have to put up in order to get into that trade. And then while we in the trade, we have to maintain a certain balance until we get out of the trade. That's called our maintenance. So we substitute that for the word balance.
Mm-hmm.
Great job, Alice.
Yep.
I got a question. The next question is, do you need a brokerage account to trade in the futures market?
Yes.
Yes.
Somebody highlighted maybe. They
Everybody should know
Yes.
that. That have to
Yeah.
be a yes. Yeah.
Absolutely. You can't trade without it.
Man, y'all make me so proud, I'm telling you. Excellent. We cannot trade the futures market without having an account through a licensed brokerage house. Because we trade within a what kind of space? When we trade the futures market, what kind of space we operate in?
Is it controlled? I'm trying to remember the right word. Regulated.
There
it is
you go.
regulated.
we're operating and trading within a regulated space. So being that it's not just regulated, it's highly regulated, you have to have an account with a licensed brokerage house. It's the only way you can participate in this market legal. Put it that way. Great job. Great job.
Okay, that brings us to the end of page 1, and I got to answer all 4 questions before to let me move forward. Do y'all remember if there's a second page?
I do not, because I didn't.
I think it's like
grab-
I think it's like 25 questions.
Oh, Lord.
Yeah.
Well, we're already at 7 o'clock. We may have to do this one again.
Yeah.
How many
And what-
questions we got through tonight?
10.
Okay.
Yeah. It's like 25, 26, I think.
Okay, folks.
Everybody okay with having a part 2?
Let me suggest this.
That's fine.
Let me suggest this.
Yeah, that's fine. I mean, we can work it out next week.
You
Fine.
guys are doing fantastic. And I gotta, let's see, what does this say? It's saying, oh, these are the questions between lessons 1 through 9. Please answer them to the best of your ability and submit your form. So, if you haven't done this, we ask you to do it. Hopefully Barbara and them will be through and we can tabulate the answers. But it seems to me like y'all are just doing fantastic. So,
and let me ask this, Johnny. Let me ask this. Does everybody understand why we put this survey, why we ask you guys these questions in the survey?
Yeah. Yeah.
Absolutely.
Yeah. The time that's spent to being taught, you want to see who's absorbing and who's getting what and how they're getting it and what needs to be gone over, what needs to be explained and what doesn't.
There you go. That's why we asked this. It wasn't just to have something to do. It was for our understanding of where y'all are understanding. And we needed to see how much you guys are comprehending and understanding before we started to, continue on into the other trainings and stuff. If we need to go back and cover some stuff. And like Johnny said, you guys are all over this. And it's great to see that because we don't want to leave no one behind and keep moving forward. But it looks like everybody is right there together with the understanding of where we at so far up to all the trainings we've done. And like Johnny said, if you haven't done it, we appreciate it if you just take a few minutes to go over this. And it's only gonna help you understand it better when you go through this survey.
Well, you guys made it clear enough for us to understand it. Through all the trainings and the manual speaks for itself. So it's I can't say that it's hard, but you guys make it extremely easy for us to understand what it is, how we go about it.
Yeah.
And even if we have some confusion in it, you guys break it down and explain it to us.
Yeah. And the manual and the manual is a very big assist. I got a lot more clarity.
You talking about this, Jamal?
Yes, sir. Yes, sir.
God, that's it.
Yes, sir, buddy.
Man.
Yes, sir. Yes, sir. Yes, sir. Yes, sir. And it's really simple. I'm almost done with it. But what I realized about it is that manual is something that you can read now, but it's something you walk with. It's something you walk with. It's just like, well, I don't want to use that example. It's a Bible. You want to keep that close to you because it is definitely something that you want to reference back to. It ain't something that you just read and put down to say that you read it.
Yeah.
You got to keep going back.
It's a great tool to have.
Yeah.
Because it explains like how you would go about, like you said earlier, how you would go into the market or the supermarket. And now you're looking at things completely different as opposed to just buy it and keep on moving. Now you know why steaks and lamb are costing so much
Yeah.
why they're so least because of the way the market is running and what season it is in.
Okay.
Yes.
Hey, Delvin, I put some quick answers in. We're up to page 20 or question 26.
Mm-hmm.
So I don't know
Okay.
if you want to kind of run through these real quick or not.
Well, I tell you what, let's get some feedback and would you guys prefer to have a part 2 to this call and finish it, or you want to just knock it out? You want to stay on a little longer? I'll let you guys decide what y'all want to do.
I mean, if you have it for a part 2, it would be a problem, but I'm with it either way.
Yeah, I stay on. I'm not.
Stay on.
Yeah, let's roll. Let's get it. Yeah.
Everybody want to go ahead and finish this up tonight?
Yep.
Okay. What order types
Yes,
can you
sir.
place your trade with a broker? Market order, limit order, stop order, all the above, none of the above.
All the above. All right.
All the
Yeah,
above.
all the above.
Outstanding. Why do we trade with limit orders?
Cause let me act like I am the only one on here. Go ahead, y'all.
Nah, do your thing, bro.
Okay. A limit order gives you the control to bring the market to you. And it puts you put a stipulation on your order. Market order, you just goes in whatever the market is, that's what you go in on with the market.
Anybody else?
What is it? Can you repeat the question, please?
Why do we trade with limit orders?
I would say the reason why we would have a limit orders is because we want to bring the market to us rather than go with what the market is at the present.
Mm-hmm.
Outstanding.
Mm-hmm.
All right.
Love it.
The type of charts we use with bar charts.
Type of charts. Now I put candlesticks, waves. I forgot the other name, and I don't know if that was what was properly being asked, but that's what I put. That's what I put.
So what's the question, John?
What type of
What type of charts?
do we
So,
use in bar chart?
Day,
Day, week, six.
month,
Man.
6 months, years, 5 years, 10 years.
Yeah. See, it's that question sounded vague to me. That's
Which level, let's see, which level might reverse or go higher? It also shows the pressure for price to move down.
At 1
Is it
second, John, if you don't mind. 1 second. Did everybody understand the answer to the last one?
yeah. I do. I see what was being asked. I do, but I can't.
I
Yeah.
want the answer to the last one, please.
Yeah, I got it.
Okay, name the chart types we use in bar chart. I gave a list of types of charts: day, week, month, 6 month, 9 month, year. I mean, you could carry on, but
Yeah, they got it. Okay,
Yeah.
great.
yeah, the primary thing we typically use the 6 month chart.
Mhm.
Okay. Now, which level might reverse and go higher? It also slows the pressure for price to move down.
Resistance.
Yeah, I want to go with resistance as
Yeah.
well.
Resistance.
Okay, let's look at this question. Which level might reverse and go higher? It also slows the pressure for price to move down.
See, that's where you got me stumped. It slows the pressure while it's going down.
Also slows the pressure to move down. Slows the pressure to move.
Okay, let's go back to the question that we
Support.
answered before. What support and resistance, what other words do we use?
Ceiling in the floor.
Okay,
Mhm.
so if it also slows the pressure for the price from going down, what would that be?
Support.
Yeah,
Support.
I'm going to say the same
Support.
thing.
Support.
Definitely support.
Support. I got that wrong then. Because I think I chose resistance.
We okay?
Boy.
Because if we hit support and it reverses and goes higher, we would be looking at the bottom side of the deal, right?
Yep.
Okay, which is used in order for traders in the market to see the support and resistance levels?
Trend lines. Yeah, the trend lines. Damn, I wonder if I use that. Excuse me, y'all. Technical charts. Huh? Okay.
Anybody else?
Technical.
We want to use the charts. Okay. The charts are going to tell us where support and resistance is. Notice I said technical as opposed to fundamental. You want to say anything there?
No, that's good. That's good, John. I think
Trend.
you did.
Higher
Yeah.
highs, higher lows. Uptrend.
Which trend makes higher highs and higher lows?
Uptrend. Ah, man.
Okay. What does the number 1 represent on a chart? What does the number 1 represent on the chart?
Is Thor still on the call?
Are we talking about the 1, 2, 3 top?
Yep.
Thor still with us?
The highest level and the lowest level. Okay. I don't think I put that. The highest. I used something else. I said something else.
All right. What does the number 2 represent?
Entry point.
Excellent.
Will you enter the trade?
Very good, man.
What does the number 3 represent on the chart?
The exit.
Yes, sir.
Yep. Stop loss. Stop loss. I'm sorry, I didn't use the proper terminology. Stop loss.
That's all. We use the 3 for our exit though. You correct?
What is the 50% retracement on the chart? The target, the 50% retracement on the
Yes,
target is the
target
target.
point.
Yeah.
Very good. Very good.
If we buy and enter the contract, what do we?
What
Good.
is the fifty
Also,
percent retracement? What is the 50% retracement on a chart?
Sell it.
Yeah.
And the target.
The target point.
yeah, we asking you what is it though? If we know we use it for our target, but what is the 50% retracement?
What is the 50% retracement? Is the
I don't know if this is asking how it.
So the 50% retracement is an area on the chart where we look to see the market retrace back to
it's
50%,
halfway mark. It's halfway mark.
have 50% of the move that it just made on the chart.
Yeah.
Okay.
Yes.
Okay.
Thank you.
It's the area that we look to see the market could retrace back 50% of the move that it just made on the chart. And we use that as our target when we get into trades.
Okay.
All right.
Stop loss. What is the number 3? Hold on. Wait. 2. I can't pull it down. Only he can pull it down. 2. Stop loss exit.
All right. It's a target area, which represents the 50% retracement from the previous move.
Mhm.
If we buy to enter a contract, what do we do to get out of the contract?
Sell it.
Very good.
In your own words, what does it mean to buy low and sell high?
Buy at the lowest price. You sell at the highest price.
Buy low, sell high. That's
Yeah. Buy low,
that's
sell
us
high.
buying it low to sell it high for the
Yeah,
profit.
there's really no other way to.
Long
The
the
But I
direction do I
market.
know.
go to make a profit?
Long the market.
Yeah, we got.
Oh,
What is, in your own words, what does it mean to sell high and buy low?
Short the market.
Go ahead, Alex. Go ahead.
okay.
Come on.
Answers to the survey. Short the market. Awesome job.
And y'all
Right.
did excellent. Great job, everybody. I wanted to just tell you, you've heard me say before, y'all know more than you think you do. And this should show you right here that you know way more than you probably thought. So excellent job, everybody.
You know, you did, because there was questions on this survey that I didn't think I knew. I'm sitting here in silence saying, oh, damn, I knew that.
Mm-hmm. Yeah. So it helps you with the, with giving you the confidence. But then it also helps us to know, okay, yeah, they getting it. So appreciate everybody. We have one of the interactive type call tonight, and it was well needed so we could get some clarity and on both ends, so y'all can see that you know more than you thought you knew, and we can see that y'all are comprehending what we've been going over. And I really want y'all to be pat yourself on the back, but also know that what we covering, it's it goes in more even in depth than what we've been talking about in this book. This book goes into more depth of the stuff we're talking about. So make sure you have it. And thank y'all for being patient, staying on, going over with us tonight a little longer than we supposed to. And with that, we're gonna jump off and y'all after you keep watching the group, so we'll have some quizzes throughout the week. And we'll end with that. And I want to tell everybody have a great night. Good night.
Have a good
Thank
night.
you all.
Good
Thank
night.
you,
Have a
thank
great
you,
night.
thank you.
Peace and
Good
blessings
night,
to
good
you
night.
all.
Thank you. Have a good night,
Great
you all.
class. Thank you.
Excellent. Awesome call. Thank you.